Okay, so welcome back. This is part three of Cymax FinTech Weekly Market Insights. So here, sort of looking at the macro outlook for what's coming soon. Now, macro outlook is a little bit mixed, I would say. And of course, this week we are going to see the next round of central bank meetings start with the FOMC, ECB, RBA, and I believe Norway as well. Now, the Fed and the ECB are both expected to hike probably a quarter. Only question is, will the First Republic banks failing make any difference? It didn't in the past, when the other banks went down and this one almost went down before, because it seems that price stability remains favoured over financial stability. Of course, they want both though. Plus, a credit squeeze is making it harder for companies and individuals to borrow, and that is going to make it feel like another rate hike in itself. That sort of not so much free money, because it's not these days because of where the rates are, but the fact that it's going to be more difficult to borrow, it's just going to again just squeeze households a little. Then of course inflation, it's so sticky. Companies that just keep raising their prices, and they're doing that to compensate for the drop in demand. This is obviously just to keep their profit margins up, and they're the highest that they've been for over a decade. Now, there seems to be mixed views on where economies are heading and how long it will take them to get there. Now, will it be stagflation and or a recession? Are we going to see disinflation begin or even deflation? Will it be a soft or a hard landing? There's just so many possible outcomes still. And although the stock markets just seem so positive about everything that's going on regardless. Now, in the US, the chances of a recession are increasing, I would say. And of course, that debt ceiling still has to be resolved. And soon as money runs out, which could even be June from what I've been reading, government spending's up already, so how are they going to balance that? And although the business sector spending has dropped, that consumer spending is beginning to drop as well. But I believe the latter, the consumer spending dropping, is really a mixture of higher rates, yes, but more importantly, those unacceptable prices now. You just compare prices from a year, 18 months ago to what they are today. The inflation, the way that they've gone up is unbelievable. So jobless levels look set to increase, and GDP could turn negative later this year in the US as well. As I mentioned earlier, that debt ceiling. So it's just chaos, isn't it? It's not new. It's happened so many times before. Do you know that? If you just look at sort of since the millennium, it's happened in 2003, 11, then 13, 14, 15, and then 2017, 2019, and even 2021. It's all just about this sort of horse trading where each party is trying to end up with some benefits, but so far it's always turned up with a deal at the 11th hour. Whether it will this time, we'll have to wait and see. But Biden does have other options. I mean, he could use this controversial solution and order the minting of the $1 trillion platinum coin. And then, of course, he can deposit that at the Fed. However, would Powell dare to refuse it, or would he accept it? Of course, Biden could just overshoot the ceiling and allow Yellen to just keep issuing more treasuries. It's just pretty obvious that the bill that was passed by the Republicans last week will get rejected by the Democrats that hold the Senate, and that's just because they was putting in too many reductions in certain things, even down to this sort of reducing or exempting some of the student loans. The Republicans didn't want that. Now, the X date is not that far away. The X date is the day that the US government will run out of money. And of course, both Yellen and Powell will be relieved when it is finally increased. And it's probably more a case of when than if. Now, it does seem to me that there's many that do expect the Fed to cut rates by the end of this year, which, again, would probably have other central banks following. But I've got to be honest with you, I just don't see it happening. They're still so far away from this 2% target inflation. And that was originally set by New Zealand decades ago. This optimum level of 2% inflation. Now, central banks do need to regain control of inflation. And of course, if it means causing a recession, it's a price that they are willing to pay. This is, again, just remember, this is my personal view, but I really do believe that. It's much easier for them to reset an economy from scratch, after a recession than it is to keep fighting inflation. I do expect unemployment to increase, and possibly by as much as 1% by the end of the year. Ultimately, I expect rates to remain at their peak for the rest of this year. Again, it's a bit of a contrast to a lot of people, but I just believe that the central banks are going to want to see 3 to 6 months of 2% inflation, if they can get it there at all, that is. But just remember, this is only my view, and for Fed funds, I expect probably about 5.25 to be where the peak is. Now, disinflation, of course, to a degree, that's going to be appreciated. However, deflation will not be welcome. Although it leads to lower prices and lower consumer spending, the problem is companies generally respond by sort of slowing production, cutting staff, and or possibly reducing salaries. So, none of that bodes well for the employees, shall we say. When it comes to sort of the geopolitical situation at the moment, there's still issues remaining there. Sanctions against Russia. Of course, they're increasing their bombing of Ukraine. Now, full sanctions would prompt Russia to not support an extension to the Black Sea Agreement. This is what's allowing grains to be exported through that corridor. But if there's full sanctions put on them, they will not extend that past the middle of May. Also, all this tension, all this sort of that's going on around the planet, you've got China, areas there, of course, you've got Russia, and everyone sort of keeps looking over their shoulder at North Korea and Iran. So, there's so many places at the moment. Now, that tension is sort of leading into military spending. And I was reading that it's about $2.2 trillion around the globe at the moment, where everyone's boosting up their defences. Now, sort of China is mending its relationships where it can. They've even sort of reached out to Australia. And of course, last year its global trade surplus reached 898 billion. Just staying on politics for the moment. So I'm in the UK, and the Bank of England here say they expect to lose at least £100 billion from QE. So what does that mean that the Feds are going to lose on what they're holding? And the ECB, to that matter. Okay, so another question sort of arising from sort of UK, Europe type thing, and I hate to bring this up, but it's Brexit again. My question is, did Brexit really happen? It was all just so fudged just to sort of get some form of a deal done. But, the EU just, it just still has so much influence over the UK. There's still over 4,000 laws implemented from before Brexit. Now, you know, I don't want to dwell on this, but for me, it's because most politicians disagreed with the referendum result, whether it was for, for them personally or whether it was for their mates in business. I don't really know, but uh, it just seems that there hasn't been a leader prepared to get it done yet properly and remove all of those rules. Uh, Personally, I really don't care if we're in or out. But I just don't like this being half in and half out. Not that we're supposed to be in at all, because it just stands in the way, and we've got all of these rules still, but without any of the benefits, and that's the point. We haven't got any trade benefits with the EU left, and yet we're still almost under their control in certain areas still. And we've had a series of prime ministers, none of them really elected apart from Boris, and of course we've got Sunak at the moment, and as much. Personally, I just don't believe he's in favour of leaving anyway. And when you look at all his business interests, how can he be? Uh, we'll be, okay. If we get a Labour government, is it going to change anything? And quite honestly, I doubt it. Okay, anyway, let's get back to business. So profit margins remain high for companies. That they're expecting to sell less, so they're increasing prices to compensate. But you've got to remember that margins are at the highest that they've been for decades. And we could also probably name it greedflation, because you got the greed from consumers wanting to purchase more, although obviously that's getting less and less now because of the prices, and you've got the greed from the companies that want bigger profits. And talking about big profits, big oil companies reported better than expected profits in the last week, which is no surprise when you sort of look at oil prices since Russia invaded Ukraine. Of course, they're well off of the highs, even though OPEC plus cut by over 1 million barrels a day last month. Now, with prices back to pre-cut levels almost, I mean, they did drop below that last week and then just sort of peaked up just slightly on Friday. Will they dare cut again is the question, because they meet again this week. Okay, so let's just take a sort of just going to end by taking a little look at some company news. So Twitter's being sued by Germany. Amazon Cloud, investors are a little bit concerned that the growth is slowing there. Meta could be fined and even banned on data transfers by the EU. That's made them even threaten to pull out of the Europe, so that will be interesting. Now, coming back to Tesla again. So, could Tesla be starting a price war? Their profit margins, on certain metals certain models is wafer thin. So, when you look back, didn't Musk do well selling all those shares at the higher prices? If you look back in 2021, Tesla was at $407. Friday, it was $164 or around that. Now, I think there's more competition in the EV area now. And of course, in China, there's the BYD company, which is backed by Warren Buffett, and that now has 40% of the market in EVs. It was up 400% last year or something like that, the revenue, I think. Now, just finishing off here, in the US, so they get tax credits on EVs, but only if they're made in the US. However, there is a sort of a slight twist on that, because that doesn't apply to any that are leased. So those companies that are leasing them, they can be made anywhere. So I just thought, that was just all worth mentioning. So I hope you've enjoyed it. I didn't, to be honest, I didn't really mention the lack of workers, but baby boomers, these guys that have taken early retirement or just don't want to go back to 9 till 5 or 7 till 7 hours, don't want to travel to work, they're finding something else to occupy their time. Okay, so I know this bit's boring, but you know, we're just trying to help you, so just bear with it. So, our services, we include not just these, but a daily newsletter. This comes direct to your inbox every morning. Global news, my views, and chart levels. Then, of course, we've got 1 day workshops to help you. We've got 1 week courses that's going to help you even more. You know, if you've got an inner trader in a week, I will help you find it. And of course, if you really want to turn trading into your career, our accredited masterclass is designed to provide you with all of the knowledge and trading tools to navigate any market and in any asset class, because we train in any asset class. And I know that because I designed that course. Okay, so what else do we offer? Trader mentoring. Just to, you know, if you're already trading, we can help you get to that next level. Consulting, we consult to companies for hedging their FX and commodity exposure, which you know you got to admit has been very useful over the last 2 or 3 years. Then we provide trader education content to individuals, exchanges, and brokers. And then if you're lacking that capital, or you feel as though you're lacking that capital, or you just don't even want to use your capital, then through our partner you can go for a funded trading account. But of course, just a little warning, you've got to pass their trading challenge. And something that will help you with that is I provide a 1 day workshop on how to prepare and give yourself the best chance of passing that challenge. So if you've got any questions, reach out to us at info@cymaxfintech.com. Then of course, if you have anything that you would like to ask me on trading, then it's chris.tubby@cymax-int.com. And we're going to go into part 4 now, which I hope you'll stay with us, which is where I go through and analyze a load of contracts, just to sort of, again, you know, all of this is really just to help you prepare for next week, and sort of the bigger picture as well. So hopefully I'm doing that. So I look forward to seeing you in part 4.